Hi, I'm Jeff Hirsch. We're here at the Money Show in Dallas with Jay Hatfield. He is the founder, CEO, and portfolio manager at Infrastructure Capital. And you guys do a bunch of funds, ETFs. You have a MLP ETF. What's the ticker on that?
AMZA.
AMZA. And you have to have an outlook on the energy market if you're going to be picking MLPs for your fund. What do you think would be?
We do. Well, what normally happens in the energy market is it's very weak during August, September, and October because we're in the what's called the shoulder months for demand. So the driving season's over, but we're not in the heating season. So normally oil prices go down.
Speaking my seasonal language, Jay.
Right. So we think that we might be seeing a bottom in oil. We're sort of in the low 50s. We also think the stock market tends to do better as a whole when we get into earnings season later in this month. And MLPs are correlated to the stock market, so could be a good entry point for energy stocks in general, and particularly MLPs because they have attractive yields if you're more a yield investor.
What sort of MLPs do you put into the fund?
We track what's called the AMZI, which is the Infrastructure MLP Index. Those are the largest, most liquid MLPs.
The pipelines and
big pipelines and storage companies, and those are the ones that they're more liquid, they have better credit ratings, and they're levered to the dynamic that a lot of people here in Dallas might be aware of, which is we're starting to export energy, so oil, natural gas liquids, and those are the big companies are building the pipelines down to Houston and Corpus Christi and Louisiana for export, so they're benefiting from that dynamic. So we favor the larger, more liquid MLPs and they're lower risk in general.
Any impact from hurricane season still, or is that not as much as it used to be?
There hasn't been any significant impact this year. A couple years ago, that really impacted refineries, and that really impacted the gasoline prices. But so far, most of the hurricanes have missed the Gulf Coast, and so it's been a relatively stable market for export. What did happen, of course, is Saudi Arabian attack. We had a spike in oil prices, but really because we're in the shoulder months, it really wasn't long.
It seemed like it was less of a reaction than most of us expected.
Right. If it was the middle of the summer, it might have been worse. It has reduced inventories, probably created a little bit more upside for oil and also gasoline, which is trading at pretty good spreads right now.
So you mentioned seasonals, which is something that I do a bit of. Do you see that the December to February period is that time when the oil and gas tends to make that seasonal low, or are you seeing a little bit?
Yeah, that's right. Well, I think there'll be some upside into the heating season, and there's also a dynamic now where ships are going to have to use low sulfur oil, so in their bunker fuel. So that could create extra demand for particularly lower sulfur fuel.
You think we've hit that low already?
It seemed that would be the normal seasonal pattern. I mean, obviously we're not certain, but if you're speculating, you would enter the oil markets now. And as you're mentioning, as you go into the driving season, that's typically a good time for energy stocks in general. MLPs are a little bit more stable. You have yield, so you can just be a longer-term investor. But for energy stocks, they do have that seasonal pattern you're describing.
Excellent. Thank you, Jay.
Thanks, Jeff.
Thanks, everybody.